On the Foot Locker side, super positive. I mean, this company has been struggling to execute on a turnaround. Prelim same-store sales for first quarter down 2.6%, expectations for flattish. And then you have Dick's Sporting Goods, which has been outperforming the past couple of years, grabbing market share, sales better than expected in the first quarter. So from the Dick's side, there is some skepticism about, like, why are you doing this deal? And after thinking about it, I think there is a tremendous opportunity for Dick's in terms of growth prospects longer term. Their addressable market is going to more than double to $300 billion as they enter a global footprint, and they move slightly away from sport to grab that lifestyle customer, which they weren't really targeting before.
Could this deal tee up scrutiny at the FTC? I mean, they both sell sneakers, but some make the case that they're same but different because they really have different markets.
Well, fortunately, I talked to our antitrust expert, Jen Rhee, a little bit earlier today, and she is not too concerned here about FTC pushing back on this deal. A couple of reasons why. One, Dick's retail footprint is pretty small, 800 stores across the U.S. Foot Locker's is obviously much bigger, but the concern would come if market share in an individual market is sort of too high with the combination. Given the FTC right now, she thinks that store divestitures would easily satisfy any concern, but she thinks that concern might be minimal at this point.
Dick's Sporting Goods stock down 15% here. Talk to us about valuation here. Is the market saying, hey, maybe you guys overpaid here?
So I don't think it's an overpay. So they're buying Foot Locker for 0.3 times price to sales with that $2.4 billion valuation on the deal. That's quite low for the opportunity that they could get. I think the real concern is the two businesses are moving at opposite trajectories. So, Dick's, again, outperforming, grabbing that customer with their focus on sport. And this deal is contrast with that. Foot Locker is more of a lifestyle focus. They have a higher exposure to a lower income consumer. That has been part of their challenges. They also get 60% of their inventory is Nike. So it is a different shift in the business. Foot Locker is seeing those same-store sales continue to decline, and that's really a contrast. So there's skepticism about that. Dick's has, though, executed its own turnaround in the past couple of years. So we see these long-term growth prospects as worth that 0.3 price to sales multiple, and that Dick's will now have to prove that they can turn around another business.
Lindsay, real quick, just give us a refresh on what the tariff situation is in that business, because I'm thinking it's really high.
So the exposure to China might be lower than you'd think. We don't have disclosure on specifics from Dick's, but it's relatively low imports coming from China, and it's mostly focused on their hard lines, like sports equipment business. For shoes, a lot of that is coming out of Vietnam. So yes, we're going to see higher prices likely with the higher tariffs, maybe on that 10% rate as of right now. So there is a headwind of that. But we think for some of those national brands, that price increase is going to just get directly passed through to the consumer.